All right. Good day, guys. Welcome to our session today. It's simply called Picking Direction.
That's it.
I'll take a guess as to what's it about.
Yeah, welcome in, guys. Don't forget, if you've got any questions, please shoot them straight into the Q&A box. You'll see that on the left-hand side of your screen there. The more questions you ask, the more you get out of us in this webcast. So, yeah.
Yep.
Anything on?
Yeah, I was going to say, if you think of something after the webcast, you're welcome to give us a call as well. We're a small business. There's about 10 or 11 of us in the office. We've all been here for a really long time.
Yep.
And the majority of our business is built off relationship building and providing a high level of service. So we're all very accessible. So if you've got any questions that you want to ask, perhaps maybe a little bit more sensitive, you're welcome to give us a call and have a chat as well.
Yep, absolutely.
But after the webcast, of course. So, in fact, before we get stuck into it,
just quickly, sorry, adjust your microphone talking to the tip. Yep. Better.
I don't think I'm the one with the mic problems, by the way. You were the one last time.
Oh, yeah, well, we're swapping this time. So.
Yeah, just keep in mind that any advice contained in this presentation is general only, so it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. All right, so general advice only, guys. Now, what we're going to do is we believe that being successful really comes down to three main components, which is picking direction, strategy, and risk management. That's really kind of been our doctrine for a really long time now, right?
Correct.
It's something that we've really harped on about because I think that's bedrock, right? There's not really much below that you can go, right?
Yeah.
But what does bring them all together is a set of trading rules, right? And trading rules allow you to bring all those major concepts together and put it in by a step-by-step process. Today's focus is going to be on picking direction. But, with every webcast, when we talk about education, we do kind of talk about very briefly the foundations and the fact that you should really have a set of trading rules in order to help you analyze the market, place trades, and manage your risk.
I have to say, like, these foundations, they apply to every marketplace, right? So whether you're trading stocks, currencies, crypto, whatever you're trading out there, guys, right? Whatever your strategy is, right? So part of strategy is what you're actually trading, whether it be stock, derivatives, whatever, right? Trading rules is important across all short-term trading. Doesn't matter what marketplace you're getting involved in. You have to have a set of trading rules that you're following. If you want consistent success in trading, like Cara said, it's the bedrock, right? So.
It's because, ultimately there's a lot of information out there, right? And there's a lot of forces in the market at the moment. Some of them are technical, some of them are fundamental.
Yep.
And what you've got to be able to do is get all that information and put it through almost like a meat grinder until you get a sausage out the other end, right?
That's it.
You'd be able to process that information through a set of trading rules, essentially. And as you were saying before, Tim, it doesn't matter if they're really tight and you need to have all the stars aligned and all your ducks in a row. Mars needs to be in retrograde and it needs to be, the summer solstice or whatever it is.
Yep.
Or you could have the opposite of that, which is fairly loose, fairly loosey-goosey, with only a few things that you kind of need to tick boxes for you to enter a trade. But the fact is that you need to have something, right?
That's right. That's right. So there's no one set of rules is the right set of rules. Yeah. So we teach a set of rules in our courses. We love our set of rules. We live by them, but it's not the golden egg, right? It doesn't necessarily mean they have to be your set of rules, right? There's many different approaches out there for the market, depending on what you're trying to achieve, right? Our rules are short-term in nature. They vary depending on different strategies that we deploy.
Yep.
Okay. If we want to do a directional strategy where we're trying to pick direction up or down, there's one set of rules for that.
Yep.
And we've got a separate set of rules for our other strategies, like our sideways option strategies, the short iron condors and things like that of the world. Our rules differ a little bit for those. So, there's no one approach, guys, but you've got to have a approach. That's the most important thing.
Yeah, I would say that, out of anything that we teach today in the webcast, that's probably the one thing that you should really take away from it.
Absolutely.
And as Tim said, there's obviously not one, there's not a silver bullet for this market or any market. and rules do need to have a degree of flexibility. You got to be dynamic because markets change. For a while there, our market was tracking sideways going up, tracking sideways going up, tracking sideways going up. And now we're seeing really kind of big movements. And so the rules that you might have in a sideways market might be different to the rules that you have in a more of a trending or a whippy kind of market. And having the ability to adapt your rules is difficult. It takes experience, and it helps when you can talk to other people, and that's where we kind of come in a lot of ways, right? We can help you tailor rules to suit you as an individual a bit more, or what your risk tolerances are. Just kind of give you a bit of backup as you try to navigate that space, which can be pretty murky.
Yeah, absolutely. And we've got a good team of guys in here around the desk. So all the advisors / educators in here, we've all had various different experiences with the markets. So, I've been in here for 10 years now trading. Kara's a similar amount of time.
Yep. That was a good segue to introducing us. We both, everyone, I think Ben would be the youngest at 4 years, I think.
Yeah.
And so all of us have plenty of experience.
And we share that experience with each other as well. So, we meet every single day, twice a day.
That's true.
Twice a day. We talk about our different views of the market. We bring all that together as a bit of a house view, and we're constantly learning from each other.
It's true. It's a really good point, because so it's not about just individual experience. It's compounded by the fact that we get to share that with other people who are also very experienced. And so it compounds almost. And the good thing is that if you do come along and do some education with us, the type of we have a strong degree of mentorship and support. Absolutely. You get your own personal trainer. That could be myself, or it could be Ben or Tim or whoever. Whoever you kind of get has plenty of years experience, not just trading, but also teaching and training and providing advice and execution, kind of an all-rounder there as well. So yeah, that was actually a good segue, because I didn't introduce us. We didn't talk about Trader Circle. We didn't talk about.
We're definitely a team. We're definitely a team around here, mate. I got your back. Don't worry.
So Tim, Caro, and have plenty of experience each. But Trader Circle's been around for 17 years, I think.
17 years now. Yep. The main educator, Carlo Castellano, he's been educating for
20,
more than
30,
that. Like,
30 years, something ridiculous.
Years.
He's also been trading. He taught overseas as well. And he runs all our education and still sends out trade recommendations as well. So one thing that we do for our clients is, if you're interested in getting some trade tips, you're welcome to sign up. We put some out, Carlo puts some out, and they obviously follow a set of trading rules as well, which we can teach you how to use.
And the owner of the business, Michael Cornups, he used to be in fixed interest world, right? So he used to run a fixed interest desk for many, many years. He's got a lot of experience in that part of the market as well as equities. So
he's really old. He's got like 40 years experience. So ridiculous. Like, he's seen generational shifts. That's like Madonna. Like, she created music for the 70s, 80s, 90s, and today, right? So he's the financial Madonna, and about as pretty as her as well. So anyway, back to the point. Why don't we continue on with some education?
Yes, let's do it.
All right. So as the real guts of the presentation is going to be about direction picking, and as far as we can see, there's a couple of main ways that you can do that. There's technical analysis and fundamental analysis. Fundamental analysis is more about balance sheets and looking at raw data, looking at financial ratios. You're looking at the board and management, seeing how well they run the company. You're looking at their earnings, what their future earnings.
Industry, their sector, how the economy's going, all that sort of jazz, right? So a lot of reading, a lot of analyzing. Fundamentals take a lot of time, guys, right? It's a couple of hours every day of doing some heavy reading, right?
Yeah, for sure. That's where the nerds come in, for sure. You get like analysts, and that's their life. And, they really geek out in that kind of area. Technical analysis, on the other hand, is more of an artist's approach, if I may. It's about reading charts. So the way I put it is, it's about looking at past price data to predict future price movement. So you essentially look at charts in the hope that history somewhat repeats itself, and we tend to find that it does. And it's almost like a self-fulfilling prophecy in some ways. There's a lot of different types of technical analysis, but we kind of boil them down into some basic principles, right?
Yep.
So the great thing about technical analysis, it's more suited for short-term trading, right? Whereas fundamentals play out over the longer term.
That's right.
And it really, I guess you could really boil things down to trends and counter trends, support and resistance, which are similar anyway. Technical patterns, entry and exit signals, and then mathematical or technical indicators. Even and the only thing outside that may be cyclical analysis, right? Where you look at a yearly pattern.
Yeah, like seasonal patterns and things like that. So, you know, election years in the US is a typical seasonal or seasonal pattern that happens around that.
True.
There's some seasonal patterns in our market where, you know, you've got reporting season. So August, normally there's something around there. February is something around there. I won't go into too much detail, but yeah, there's plenty of seasonal patterns out there.
Well, just because it's relevant now, May go away is another one, right? Often you see selling in May. And I mean, we literally just experienced that.
Oh yeah.
So yeah, cyclical analysis would be part of technical analysis, but that's a bit more medium to longer term, I feel. Or it's a bit outside the scope of today's webcast.
Yeah. So I guess TA is what we're focusing on in this session, right? So you know, TA being more better for traders.
Yeah, I think so.
Short term.
Yeah, it's certainly a crutch that we lean on. We also like fundamentals. And we look at fundamentals. Tim's a lot more of a fundamental expert than I am, and Sam Green, perhaps even more so, who's another advisor on the desk. So if you do want to talk fundamentals, it's something that we do talk to our clients on a regular basis, something that comes up in our morning meetings all the time.
Absolutely.
But it is more for the medium longer term, and it's more of an addition to your analysis rather than a foundation of it.
Yeah, I guess if you're planning a trade and you look at those foundations before, you saw the first thing was picking direction, right? Now, as a trader, when I put my trading cap on, it's 80% of my decision, 90% of my decisions all based on TA, right? All on technical analysis. But when I'm managing my portfolio of shares that I'm holding longer term, well, I've got to put my investor cap on. And I'll thinking about those stocks and companies when I'm buying, holding, selling, more based on fundamental reasons, right? So if I'm trading BHP, for instance, or buying BHP in my portfolio, what's iron ore doing? What's copper doing? What are they likely to do over the next 5 years, 10 years? That type of attitude where what am I actually trying to achieve as a short-term trader? Well, I just want to know what's going to happen tomorrow, the next day, maybe over the next few weeks, right? Now, fundamentals aren't as useful for that short-term prediction, is it?
Not generally. Sometimes like a report, like a fundamental event, it's just not to get confused with. Like if there's a report, that will affect the chart tomorrow. But that's more of an event rather than a broader analysis, right?
Correct. So we're always aware of what events are coming up. Is the stock reporting? You know, is the Fed going to lift rates by 75 points tomorrow?
For sure.
That sort of stuff.
Yeah, exactly right.
Might ease off a bit. Might chill out a bit. Just might wait for that announcement to come out before I trade.
Yeah.
You know, and that type of attitude.
Yeah, exactly. So even though we're saying that technicals are better for short term, you do need to be aware of fundamental events like inflation numbers, Powell coming out, and you know, back in the day it was really hard because Trump would just tweet. There would be no warning.
I'm trying to forget about that time, mate.
It was interesting to say the least.
It definitely was.
All right, so this is a screenshot of the chart, of my chart that I took an hour ago or something. So this is fairly up to date, and it looks pretty messy. If you're not used to this type of chart, the goal of today is, by the end of it, is to give you some kind of ideas as to what's going on there, right? Be aware that we use OHLC type charts, which is open, high, low, close. If you use candlesticks, this is exactly the same information. It's just that our bars aren't filled in. That's all. If you're using line charts, then you probably want to switch to OHLC or candlesticks, one of those two.
Yeah, there's so much more information in open or high, low, close charts than there is in line charts.
Yeah, I mean, there's 3 times as much information because I think the line chart just shows the close.
So there's a good progression to get yourself to an open, high, low, close, or a candlestick chart.
Yeah, same information, just displayed slightly differently. So when we talk about technical analysis, just to give you a bit of quick structure, right? And if you've got experience in this area, this is going to be perhaps a bit boring for you, so I apologize, but this is more of a beginner's webcast. So what we do is we start off by just trying to understand what the market range is and try to understand where the trends are, right? We're just looking at the stock fairly broadly. So we would draw our trend line in, right? In this case, it's uptrending. Doesn't take a genius to see that the stock is going up over time. But what we try to do is we try to apply lines that create a certain rule. And the rule in this circumstance is that every time the stock reaches that line, it bounces higher. And what that allows us to do is project into the future so that if the stock ever does return to that line, we've got some degree of confidence that it's going to bounce. Now, that's not enough to make a trading decision on, right? But it's just one piece of the puzzle. And so it's about getting all the right pieces in place so that we start forming an image and so that we can have confidence in making a trading decision. This is just one piece of it, right? But it is a great place to start, right? Often where we start, right? The other thing that we might want to do is just identify quickly if there is a bit of a trading range. And it seems on this particular chart that when the stock does rise up off that uptrend line, it does hit a resistance, right? A parallel resistance. That type of pattern is called an ascending channel. And it just gives you an idea that in the future, if it does go back up, it gives you a bit of a ceiling as to where it could stop. Doesn't mean it will, but it could. Yep.
Yeah. Being good at technical analysis, one element of is learning all these different types of patterns, right? So there's many patterns out there. You can get as complex or as simple as you want. We keep it fairly simple around here.
Yeah, we do. Yeah,
we lean on maybe 10 patterns, really.
Yeah,
overall.
I mean, yep.
There's so many more out there, but we just lean on the more common ones that we see often in the market, right?
A lot of patterns tend to kind of there tends to be more than one pattern anyway, and people just call it different names. Like, a channel at the top of the range could just be a double top or triple top, and you could call it whichever one you wanted. Do you know what I mean? Yeah. So you can spend hours learning this stuff.
Absolutely.
But it seems to us that, and the reason why we keep it simple is because, unfortunately, the more you know, doesn't actually help you make money, and it can have the opposite effect.
Correct.
Right?
We've seen that before many times.
It's happened to me personally where I get over analytical.
Yep.
Now that we've defined our market range, we want to see if there's any other kind of key levels of resistance or support. In this particular chart, a very key level that's played out a couple of times is at that particular price point. As you can see, historically, it certainly bounced from there and returned back to the trend line, then went back up to it and bounced from it and returned to the trend line. So it obviously was a bit of a sticking point, right? So that's what you call a key level of resistance, something that is going to affect your trading in the short term, right? Because you can go look at resistance 5 years ago, but that's not going to help you right now, is it?
No, not at all.
The next thing you want to identify once you've drawn all your lines, so we're talking trends, counter trends, support, resistance level. Once you've got all your lines on your page, it's about understanding if there's any patterns there. Now, we identified the channel before, but there's another pattern lurking in there, which is the ascending triangle, right? And it's, as you can see, it kind of makes sense. It's called a triangle pattern because the stock is eventually going to be squeezed into that point, and it must either break the resistance or it must break the uptrend line. It has to break one of those two things eventually because time will march forward unless this stock goes into a trading halt and never trades again. Right?
That's right. That's right.
So the next thing that you want to look at once you've found the patterns is see if it's breaking out or if it's still inside. Now, in this particular circumstance, you can see that it actually is breaking out today. It tried twice in the past. Today, on the third attempt, it has broken out. Breakouts tend to be a good signal, don't they?
Absolutely.
They tend to be a kind of an indication that, all right, the thing that was holding it back is no longer holding it back. And, I guess we're on is a way to put that.
Yeah, it could be any of reasons that you're breaking out that day. Like if you go start reading the news, I guarantee you the news will have a reason for it, right? But what do you want to do? Go read news every day or just wait for the breakout pattern to happen and follow the breakout, right? I know what's going to be more reliable for me. It's not going to be the news.
Yep. And, we're not the only people who know this. In fact, part of the reason why technical analysis works is because we're not the only people that know this. This is very, very basic run-of-the-mill TA, right? This is not complicated. And a lot of people see that breakout, a lot of people trade it, and that in turn can help push the stock up because people are buying it.
Absolutely.
Now, we touched on it before, but the idea is to know when to enter, right? That's often a question that we get asked by people as a really kind of important factor. All right, I get it. I get TA, but do I enter today? Do I enter tomorrow? Should I have entered last week? I mean, at what point do you actually pull the trigger? And you can refine it pretty far, but we just refine it on a day-to-day basis and say, okay, well, on the day of a breakout, that's pretty good, right? We think that's a pretty good entry signal. You can see that the, sorry, you can see on that image, hang on, I've gone too far. You can see on that image that the it's a nice strong bullish day with lots of buying, and there's not too many bullish days in a row, right? So it's not as if we're getting too late into the move. You know what I mean?
Yeah, yeah. I guess just to explain a little slightly different way of what we're doing at this point. So we've gone from looking at trend lines, uptrend, support, resistance, and now we're focusing more on that particular bar. Okay, so now we're doing a bit more bar analysis. Where's the open compared to the close? How big's the bar? Is the buyer staying in control of this day, or are we seeing selling come back in already? It gives us a level of confidence of whether this breakout is going to lead to a continued move or not. Right. So there's a lot you can read on that one bar that will give us an extra level of confidence to do a trade and
Yeah.
how far we think it could possibly move.
I mean, that's a great way to put it because it is a confidence game, right? I mean, at the end of the day, you need to have the confidence to trade. And it's about layering those those things on top of each other, those principles on top of each other until you get the confidence to trade.
Yeah.
Some people I know don't need a lot of confidence and they're very risky people, but that's legitimately, their thing, right?
Yeah.
And some people, like I said, really need a lot of confidence in order to pull the trigger. Right?
And that just highlights the why consistency is so important, right? Like if you've got a much higher risk tolerance, you've got to stay at that high risk tolerance because you're going to make big profits and you're going to make big losses, right? But you want to make sure you make bigger profits than your losses, correct? But if you wishy-wash, if you go on a high risk 1 week, low risk the next, then you're going to throw your risk reward out, right? And this is why consistency is so important. Having a consistent set of rules, consistent strategy that you're deploying, know where your stop losses are, know where your stop profits are, and stay consistent to that.
I think in the beginning it's hard to know where you're going to sit. And I know with all our program, with whatever we teach, we encourage at least a month or two of paper trading.
Absolutely.
And so basically, the idea is to treat that obviously very seriously. But at that point, you can start being, wishy-washy, or in other words, like trying to suss out where you sit, right? So that by the time you're trading, you don't have to be flippy floppy.
Yeah.
You can you actually know what you're doing, because you're not going to know as a beginner.
No, you're not going to know. And that's why it's good to get taught a set of rules from somebody else. That way you've got a starting point, right?
Yeah,
and you
for
can
sure.
use those rules over a period of time. And if they're too conservative for you, you can just make a few tweaks, right?
Yep.
And that's the importance of getting educated, right? And getting a set of rules to start off with. That way you don't have to go out and work it all out yourself. Because like honestly, if I think back, so I learned through these courses, right? That's how I came into the business. So I actually went to one of Carlo's courses, got to know Carlo really well. Then he offered me a job here as an educator, right? And that was my starting point. Honestly, what I learned in a year with Carlo, I reckon would have taken me at least 5 to do it on my own, right? Like,
yeah,
more.
if you ever did, because you've got to, sure, it'll take 5, but you've got to keep motivated after the second or third year.
Yeah.
I mean, that in itself means you might not have ever even gotten there. And we see it all the time. I mean, a lot of people who come through our courses, and by the way, it's a perfectly natural approach, which is I'm going to suss this out by myself before I take a proper dive in. And that's totally legitimate. We just don't encourage you to put a lot of money on the market whilst you're doing that. By all means, go out there, read books, watch webcasts like you're watching now. Go watch YouTube videos. I mean, I still do. But before you take any kind of serious steps, either have a mentor or have good education, or both, right? Hopefully, if you don't want to go get proper education and pay for it, make sure you got someone who is willing to spend the time with you to teach you, basically, whether it be your mate or whatever. But make sure they know what they're doing as well. One of those two things, right? Preferably both.
So Yeah, look, back to the education. So at this point, we've done a bit of we've done our uptrend line, support, resistance, looking for trends. Done a bit of bar analysis. We like what we see on the bar, so we go to the next phase of the rules. We start looking at indicators.
Yep. So they're called technical indicators. They're mathematical indicators. Basically, they're sometimes complex algorithms that are displayed as a chart, right? I feel like I'm over explaining this. Basically, they're other stuff that sits on your chart that gives you some kind of indication towards something, right? And they're really cool. And there's a lot of different ones. We use Bollinger Bands and stochastic oscillators. We used to use RSI, but I find them too similar to stochastics to worth putting on my chart and cluttering it up. But if you use RSI, that's totally cool as well. MACD is another one. What else? There's a few others out there.
There's heaps out there.
But I would say they're the most popular though.
Yeah.
Oh, and moving averages,
Yeah.
right, would be the other one. I really like moving averages too. I haven't put them on this chart because we want to keep things simple. But the stochastic, we just thought we'd put in here because they're kind of cool. And what you can see is that they kind of follow the chart above. So the stochastics are the thing highlighted in teal or blue, and and you can see that they the red and blue line somewhat follow the chart above, right?
Yeah, and it gives you a sense of whether the short-term move in the market's overbought or oversold.
Yep.
There's different settings that you can set the stochastics on as well.
That's a fair point. Yeah.
Depending on your time frame that you're trading. There's a lot to it, guys, right? And setting this up to a point where it's actually giving you some, good consistent probability
and useful information.
Yeah, useful information.
Yeah. So and Tim's exactly right. So this is a short-term stochastics, right? You wouldn't, and so they're only going to be good in the short term. And the overbought and oversold areas are the horizontal dotted lines. And you can see that when it does get to those overbought, oversold areas, a turnaround's not too far away.
Correct.
And I think the reason why we've put this last, so this is number 5, this is the 5th step, right? The reason why we put it last is because indicators are the last thing that you should check, and they're a confirmation tool only.
Yeah.
A lot of people tend to, and when I say a lot of people, I would say the majority of people that we teach at some point lead their analysis with stochastics and indicators. And I have to correct them. Tim, we have to all correct them and say,
constantly,
stop talking about indicators first. Let's talk about everything else, and then we can talk indicators if you want to, right? Because it's a rookie mistake to lean on those too heavily. And I can understand why, right? Because it's almost like you're getting a bit of a cheat sheet.
It feels that way.
It feels that way, but it's a trap, right? Unfortunately, there is no replacement for drawing your trends, looking at your support and resistance, and identifying patterns and entry signals.
Yep.
That's your foundation, and your technical indicators are there as confirmation tools only.
And if you're trying to use some of those fancy algos out there that are going to draw your lines in for you, I wouldn't, because I find that I adjust my lines visually. And it's very hard to write a code that's always going to predict that support or draw that support or resistance line the way you really should be drawing it. And there's a bit of an art form in drawing lines.
Yeah, that's
rather than just a mechanical engineering type of approach to it. So, it's an art form, TA, guys. Like, don't just rely on some black box algo. You'll do it better yourself over time as you learn it.
Yeah, look, it's like an aeroplane pilot. The machine, you can have the machinery do a lot of the work for you, but you still want to be able to know how to fly the plane.
Correct.
So it's okay to use those algos and black boxes and stuff like that, but it's not a replacement for your knowledge. Because so that's good advice. So if we could just wrap up, and I did add the moving averages.
There you go.
Right. So yes, I remember why I added these. There's the 50, 100, and 2-day. They're probably the 3 most popular moving averages, even for medium to longer term traders. I think they're the most popular.
Yeah, I definitely use it from a trend point of view, right? And a support resistance point of view.
Yes.
I'm not trying to predict tomorrow based on these averages. I'm trying to get an idea of what the overall trends and the health of the trend is.
Yep. And so that would, again, add credence to the idea that they are confirmation tools, right? That's why we're done at the end of their analysis. But I think part of the reason why I put these in the chart is because, as you can see, every time it gets to the 50-day moving average, which is the green line, it bounces higher. So as Tim said, it's good to use as a support level, but rather than a support level that's static, that has, y equals mx plus c, the classic trend line or the horizontal line, it moves with the stock.
Yeah.
And every time in this particular circumstance, the stock has reached the 50-day moving average, it has turned around.
Yeah.
And so we can take that into the future, just like the trend line or another support.
Yeah. And then if the 50-day broke, that might be a bit of a signal of weakness coming into the trend.
Yep. Moving averages actually has a lot of analysis.
Oh, yeah.
I've got a video that talks about that for like 20 minutes or something. But it's not too complicated. You can honestly understand this stuff really just by looking at them and analyzing them with some kind of deduction. Yeah.
And different instruments will behave differently to the averages as well, right? So, this particular one's behaving at the 50-day moving average. You might go look at the S&P 500 or the XJO, and they might be behaving more to the 100 or 200 day, right? So
Yeah, absolutely.
You got to stay quite open-minded when you're looking through the different stocks and the different instruments against the averages, and just sort of say, okay, well, how's this particular instrument behaving?
That's a good point. Yeah. So how it plays out on one stock might be different to another. Yeah.
So there's no golden rule once again on
No.
the behavior. It's instrument by instrument when it comes to moving averages.
Yeah, that's very true. But they are some of the most heavily looked at averages, and that's why we like to look at them sometimes.
One of the favorite things you showed me, actually, Caro, was the S&P 500, and when it got a certain distance away, it tended to pull back in on the uptrend.
Yeah.
And that was so consistent for years.
Yeah,
absolutely
it's
years
pretty good.
until now we've broken below and gone a bit more bearish below it. But
Mhm.
on that uptrend through the last few years, that was such a consistent signal.
Yeah.
Right.
Yeah. So, that's a really quick and easy way of looking at it is for oversold and overbought markets. It's just one indication, but it again, because a lot of people look at it, it tends to be this kind of self-fulfilling kind of thing.
Yeah.
All right. So just to wrap up, you always want to look at your trends and counter trends. You want to look at your key resistance and support levels. You want to look at or try to see if there's any patterns and or breakouts. Confirm with entry signals to time your entry, and then finally confirm with your indicators. Right. I put consider fundamentals at the end there because I don't want to exclude it from the conversation. Right. But you don't have to do that if you don't want to.
Absolutely. And from a trading perspective, as we said earlier, things that you would bring in maybe would be up and coming announcements more than anything, right?
Yeah, don't forget that.
Like if you're trading a stock and you know it's going to report tomorrow, well, you might want to close your trade down because, who knows what that report's going to bring. Like often stocks can move upwards of 10, 20% on their reporting, right? Like,
sure. Yeah.
And if that's an adverse move against you, that could potentially be a big loss or a big win, but do you really want to be holding a trade through that volatility?
Yeah. And the irony is that even if you had inside information, which would be illegal, you still don't know how the market's going to react to that information.
Yeah.
Always be aware of that stuff.
Yeah. The only other tip I'd say there would be if you're trading something like BHP, keep an eye on what iron ore is doing. Keep an eye on what copper's doing. You know what the company does. If you can get a measure on how that instrument's moving, like for BHP, it's so easy because bulk of their profits come from copper and iron ore. So keeping an eye on those two things is definitely a direct influence on the sentiment towards the stock. So if you've got an uptrending BHP with an uptrending copper and uptrending iron ore price, well, it's just adding that extra little bit of confidence to your trade.
Yeah. Yeah, absolutely. I think as a beginner, you've got to try and discover how much capacity you have, right, for learning and whatnot.
Yeah.
Because by extension, you could also say, well, to keep an eye on price on iron ore and copper, you should keep a price on China and what they're doing and whether or not they're going through a stimulation phase, or
you know what I mean? Deeper and deeper.
And you can go
deeper
down that rabbit hole pretty quickly, and it can get pretty crazy.
Yeah. We've just got a question that popped up on the screen. I missed the one earlier, how to know graphs directions. Well, we're definitely covering that through the webcast. But the next question is, how is the best way to learn this? Do we want to cover that a bit later?
Yeah, I'm going to cover that because the best way of learning this is by coming along and doing our course. So
hold on, Robert. We'll definitely get to that.
Yeah. All right. So all right. So we can talk about strategy, but instead of talking about strategy, how are we looking? So do we want to maybe quickly apply some to
Let's get across to the market. talk to XJO maybe quickly.
This is going to be interesting. All right. So hopefully on your screen, you should be able to see, this is a chart of Rio Tinto, which is one of our biggest miners. And they mainly mine iron ore from right. Would you like to draw the lines?
Sure.
So,
so anytime I approach a chart, guys, okay, the first thing I always do is zoom out. Okay. I want to get out to maybe a couple of years worth of data. I've got this on a 1-day chart. Okay. We typically do most of our analysis on a 1-day chart. Now, this charting engine I've got in front of us is Iris Viewpoint. Okay. And this is what we get our clients to use for trading. So basically what I want to do is have a look, is there a clear trend in the long term? Okay, that's where I want to start off with. And you can see there is an uptrend here, can't you? Right? That's quite clear. And that trend starts down here somewhere. And I'm just looking for a clean line. Okay, I don't want to cut through too much data. I just want a clean line to represent that long-term trend and whether that trend line's relevant to me right now or not, right? And I'd be drawing something like this in, aiming for at least 3 touch points, right? But as I zoom in, you can see it's not all that relevant, is it? Right? The current share price action is nowhere near that level. So there's definitely no relevance for me there. So I'm not going to take a lot of notice to that line at the moment. So I'll start coming in closer and go, okay, is there any other patterns I can notice or see at the moment? Is there any like common support or resistance levels that are being used by this stock, that I want to take note of from this time frame? And, I might sort of start here and go, okay, there's clearly, I'll just try and make this a little bit thicker so you can see it. It's a little bit hard for us to see because the screen's actually a little bit far away from where we're sitting.
Yeah.
Okay, so basically you can see there's definitely a level through the middle of the chart here, a bit of an equilibrium. It keeps going back to that level, uses it as resistance, uses that support, and it has flirted with that level recently. So I'm just going to leave that one in. Okay. And I'm going to keep coming in a little bit closer and just see what's happening in the nearer term.
Well, can I just quickly say that level that you've drawn in is also roughly the average price for the past 200 days?
There you go. You can see the 200-day moving average in red down here.
Yep.
All right. So there you go.
That's the average. Yeah. So that just to be perfectly clear, that is literally the average price Rio has traded at for the past 200 trading days, just to kind of put some impacts behind that number.
All right. So then coming in closer, short-term trend has been down recently through here. Okay.
Yeah,
it is starting to look like that could be changing. And there's a little bit of an uptrend short-term through here. So it's just recognizing, and this is not an easy chart to read, by the way, guys. All right, we have started off with something a little bit more harder to recognize patterns, which is a good way to be, in the training, because if I just show you easy stuff, you get used to easy stuff, right?
Could also potentially duplicate the counter trend line, make it a channel.
Yep. So a little short-term channel there.
Something like that, just to give you a bit of a defined range.
So what can I see from this? Okay, I can see that there's definitely an overall longer term trend, but that plays out over years and years and years. Okay, and it's not relevant to me right now. In the shorter term, okay, we had a broader trading range up higher, okay, and we've had a bit of a trading range a bit lower than 107. Okay, we're currently above the 107 phase. Okay, so we're not playing down here, we're playing above. So what's the possibilities? Okay, let's have a look. If this uptrend, this little short-term uptrend continues, where could this head to before it starts finding resistance again? Well, there's definitely a clear level there.
Yep.
Okay, if I zoom out, you can see there's plenty of touch points through here in the past as well.
Yep.
Okay, so with these support and resistance levels, for me, the more touch points there has been over a period of time, and I don't want to go too far back, right? The more touch points there are, the more valid that level becomes.
Yeah.
Okay. Because other people, once again, it's a self-fulfilling prophecy. The more people look at this, the more people might go, okay, I'm going to trade to that level and see what happens.
Yeah. Oh, for sure.
And then if it breaks through that level, I'll keep going bullish. I'll add to my position. If it fails that level, I'll remove my trade and take my profit.
Yeah.
And if enough people do that, guys, that's what moves the market, right?
Yeah, and as just to reinforce what Tim said earlier, you want to pick levels that are still fresh in people's minds and still relevant recently. That 122 level or whatever it is has played out recently and has played out historically. You don't want to go back and pick a level that played out 10 years ago because
Right.
it's not going to be in people's minds. It's just not going to be relevant.
Yeah, absolutely. All right. So what have we got? I've got all my lines drawn in now. Okay. So I've drawn in levels that look clear to me, that stand out, and then I come into more recent time and have a look. So it looks like it's breaking out of what we call a pennant pattern. Okay, through here. All right. So it's broken through there, suggesting that maybe this downward phase that we had through the monthlies, so March, April, May into June, this downward momentum could be coming to an end, is what this is suggesting at the moment. Now, today's bar, we had a lot of confidence earlier, but that confidence is starting to come out. So the selling's come back into control today. For me to go directional, I want to see the buyers stay in control today. Okay. That's the bar side of it. So we're breaking out of a pennant, but I'm seeing a little bit of a lack of confidence. Low volume as well at this point. It is coming into quarter to two. So
Actually,
I
yeah,
want
that
to
should be
see
higher.
a little bit more volume, right?
Yeah.
So see how I've got a breakout, guys, but the rest of the analysis is starting to talk me out of doing a directional trade.
Yeah.
Okay.
Yep. I'm actually feeling the same way. In addition to that, where it's trading at now is a key level of resistance as well.
Oh, I haven't got that highlighted, have I? Did I draw
And
that in?
no, that's the
No.
current price.
Okay, that's why. I thought it was an actual line. There we go. So I'll draw that in because we've got touch points through here, guys, so
Yeah.
that we can see.
So and you can see even recently it stalled there as well. And even like because of what you just said and because of that resistance, I also question the downtrend line as to whether or not it's truly broken today. And that could be a thing there because it's hard to actually have, like, when you're drawing your trends, you might find that you actually adjust them a bit later as new information comes in, which is totally legitimate, by the way. You should change your opinion as new information comes in. That's how you should be as a person, right? And whereas some people see that as a bit of a criticism, where you actually should be like that. And so now that we've kind of realized there's a bit more of a sticking point around here, maybe that downtrend line might actually still be in play. Maybe
maybe it hasn't quite broken.
Maybe it hasn't quite broken yet.
And this is what, mate, this is where the art form comes in. Okay. If you take an engineer's approach to this, you'd say that's breaking today.
Yeah.
I'll go look at a trade. But if I apply my art form and allow a bit of slippage, am I drawing with a pencil or a thick texter?
Yeah,
type
true.
attitude, right?
Yeah, you could use a chisel pen.
Right. Then I'm looking at this going, oh, has that really broken?
Yeah.
The other thing that puts me off on this is that my stochastic is heavily overbought, and
That's
it's
very
been
true.
in that overbought area for a period of time.
Yep.
So I'd have to have a huge level of confidence to go against that overbought signal on my stochastics. There is times where I will go against that, but there has to be a level of confidence on the chart.
Yeah,
right?
that's a really good way of putting it.
Clear breakout, high volume, and maybe a few other things to push me across the line.
Yeah, that's a good way of putting it. You can go if you jump across the S&P 500 real quick. I'll give you another example of this. This is something I talked about the other day with Sammy.
What did I do there?
That's some weird. That's the PS 500. That's the Russian. No, I don't know.
All right, there's a little bit of a delay. Go.
So yeah, okay. So you've got those lines drawn in already. I was talking to Sam about yesterday, and I'm like, oh, it looks like it's breaking the uptrend line. And Sam goes, yeah, it could be. But he goes, I reckon it's still inside, right? Even though quite clearly it's outside. And I go, what do you mean? He goes, well, it doesn't want to break 41, whatever that number is, 4,100.
Yep.
So if you zoom out a little bit, you can see how 4,100 plays out. You can see it's a level there, and it was historically, and even in further back it is, but you don't have to show it. So the fact that it hadn't broken 41, Sam's like, well, it hasn't broken 41. It's consolidating at 41. It doesn't want to break that range. So has it really broken the triangle? And the answer is probably not, even though it looked like it broken the line.
Yep.
So unfortunately, it's not as simple as, oh, it's broken, so let's just do a trade or whatever it is. You have,
Well,
like Tim said, it's a degree of confidence.
it's degree of confidence. It's levels of confirmation, right? You want as much confirmation in your technical patterns as you can possibly get, right? There's
Yeah.
no point of having a break of a triangle if you've got a resistance that's 0.5% away, right? Like you might have to wait for that break of resistance to happen as well.
For
Because
sure.
you don't know exactly what the other traders are looking at.
That's a
And
good
they
point.
could be looking at the breakout, or they could be waiting for that resistance to break
Yes, that's
before
very
they
true.
pile in.
Yeah.
And so we've got to stay on this on the side of, okay, don't get too stuck on what you think should happen, but have a look at what's on that chart and go, okay, what are other people likely looking at? And am I willing? Have I got enough evidence to say there's enough traders out there trading this view right now? It's going to keep going.
Absolutely. And even when we see fundamental events, just to add to your point, they'll drive it to resistance levels. Like even when a stock's reporting, they'll drive it to a key support. They'll drive it to a key resistance. You can predict it pretty accurately. Sometimes it'll go past one key resistance, just go to the next one or whatever, right?
Yeah.
But they're never. We find it's very rarely that they're just arbitrary numbers. They tend to be levels that have played out significantly in the past because people eyeball them and go, yeah, that's where I'm going to hit sell.
Yeah. And even on this chart here, there's one pattern I'd love to sort of point out is, because you've had this big downtrend through here. They call this a reversal pattern. It's a double bottom.
The double bot.
Okay. So you got the first part of the bottom, second part of the bottom, broke the neckline, that resistance. And what
the waistline, one might say, because it's a double bottom.
Yeah. The waistline's broken the waistline. With a double bottom, you take the difference between the waistline, this is our terminology now, and the bottom support level there, and you translate that to the top and you create a target.
Yep.
That target right now is 4,300.
Which is also a past resistance level.
Yeah. Right. So at this stage, if you buy into that pattern, if you believe in that pattern, well, this should go to 4,300, and then we have to see what happens from there.
Have we got time? I was going to say, do you want to see if there's a fib?
I'll let you do that. You're better with the fibs on.
Sometimes, yeah. I don't do them too often because they just I don't want to confuse, but I am interested now, so I'm going to do it. If you guys don't like it, well, too bad. I'm hoping this will let me do it.
Yeah, there is one. There is a fib level close by there. That's for sure.
Sometimes because I haven't done this yet. You might need to draw it from up there, but I think he is fine.
Well, it's definitely showing a level at 43 there. So.
Yeah, 42 and 43. Yeah, it totally disregarded the first level. It kind of stalled there. The second level kind of played out. That's the support.
Yep.
Now it looks like it's gone for the second.
So to be clear, guys, we don't use Fibonacci in our rules that we teach in the course. This is just sort of something else on top of.
That's just another,
just to see different targets, likely targets mathematically on the chart.
Yeah, a lot of people use fib though, which is why it's good to look at every now and then. But it coincides with our resistance supports anyway. We used to use them historically. All right, so we're getting towards the end of the presentation. Is there anything else that you wanted to look at? Or?
Maybe we go through another chart and then we'll.
Yeah, what do you think?
Let's have a look at one of our other favorite stocks at the moment, which is Bluescope. We really like Bluescope from a fundamental point of view long term. There's a bit of headwinds for the stock at the moment.
Yeah, there is. Yeah.
I'll clear off all these lines.
It's for the sector though, isn't it? Rather
than more
stuff.
Yeah, it's definitely a sector related thing, right? So it also had a really, really good run through the last few years of COVID. That was COVID crash, and it's just went up incredibly after that. And look, I'll just highlight where there's different phases, and that's what I like about educating on this chart at the moment. This was a wonderful phase for this stock, right? It was just in a beautiful uptrend. And when you've got trends like this to focus on and use for your trading decisions, there's a huge probability of success when the market's behaving this way or a particular stock is behaving this way. So I guess I'll highlight this, that there's better times in the market than others, right? And trending markets are so much easier to trade than what we're trading at the moment, which is a very volatile, whippy market, right? So technical analysis not only does it tell us direction, but it also leads us towards strategy types.
Oh, yeah, that's a good point.
So in this phase of an uptrend, I'll be trading certain types of derivatives or derivative strategies. And I'm not going to go into that too much, right? But in options, which is one of the main tools I like to use, I can either trade quite strong leverage positions for the market to go up or a stock to go up. I can trade sideways, I can trade bearish, I can, the stock going down. There's so many different strategies I can choose from, right? We teach that through our more advanced courses. But technical analysis also guides me towards what type of strategy I want to be using through that phase. So in a phase like this, there's very directional type style strategies, and they're best used in this phase because you maximize your profitability, right? But then when you start getting this phase of market where things are whipping around sideways, because that trend's ended, right? You had a reversal pattern up here called a head and shoulders. Okay, that played out, went into a sideways phase, and now it's just really chopping around, even threatening to go bearish, right? So as I zoom in a little bit more here, what I can clearly see is a channel pattern. Okay, so there's a clear channel through there. There's resistance that's been tested maybe 4 or 5 times. Then there's a few different support levels that this is flirted around with. But essentially, the trend is more sideways than anything. We don't have many lower peaks and troughs really to call this a strong downtrend yet.
It's not downtrending, no.
It's definitely in a bit of a channel pattern.
For sure. And I mean, even if you didn't define those ranges, you could still just, it is going sideways, right?
Yeah.
It's not going up, it's not going down. It has its moments of both, but it's not making any headway either way, right?
Yeah, absolutely. Now, because it's a channeling pattern and it's towards the bottom of the channel, what am I thinking about doing, guys? I'm thinking about going bullish, aren't I? At some point, this is like to go back to the top of the channel. Now, I'm not in this yet. I'm not trading this yet. And why? Because I haven't seen the right signals that I want to see through here to suggest it's time.
Yeah, Caro's in it though.
Caro's in it. There you go.
I'm already long it. Yeah.
Jumped the gun, in my opinion.
I jumped, yeah, but I got in down the bottom there. So I'm already, even if I do see a pullback, I'm still in front.
I don't think he followed the rules for this one, guys. Just secretly, I don't know.
In fact, I probably shouldn't have said anything.
No.
There's a few patterns in there that we haven't talked about that I think that kind of justified my position, but look, we won't get into
strictly to the rules, and that's what I'm trying to keep this to, guys, right? To the rules we teach in our courses. This didn't meet that rule. Okay. No. So through here, none of these particular bars once gave us an entry signal. Today came close, but now that it's pulled back into that resistance level once again, and one of the reasons why I jumped across to this is I saw it break earlier today. I thought, oh, this could be a good one to look at this afternoon because we do most of our new trades in the afternoon. But it's pulled back, right? So even though this has come to the bottom, and this is all about picking bottoms and stuff like that, guys, I'm still not in this. Even though I'm fundamentally really bullish this stock long term, I still have not jumped the gun and gotten into this yet because I'm waiting for the price action to change. I'm waiting for that actual signal to say now's the time. Now, not so Cara is probably likely to be right, okay, in getting in on this trade because fundamentally, me and Sam Green love this stock, and we talk about it every single day in our meetings and how much we love this stock from a fundamental standpoint, right? So we do have some analysis on to get in why you should get into this stock, right? But trading short term, and I'm assuming you got a mini warrant on this?
Yeah, I went mini long, and if you understand minis, my stop's all the way down to like $15 or something like that.
So the strategy that Caro's deployed here can be held for 6, 12 months. It doesn't have to be a short-term trade, right? But if you were doing a straight call option on this, which is an option strategy, which you have to be in and out within a certain period of time, very short period of time, it's like a 1 or 2 week trade, you wouldn't have gotten in on this yet.
No, to be clear, the only reason the only strategy I'd feel comfortable doing what I did was a mini warrant because it's still leveraged but fairly safe. I wouldn't be going into any kind of short-term positions.
And with our Trader Circle membership, we give a variety of trade recommendations. Okay, so we give what we call them inner circle recommendations. Now, those recommendations have to fit the rules you learn in the course. They're usually short-term in nature. We also do what we call desk recommendations, where we put things out that are a little bit different to the rules, and they're based on things like fundamentals and a different, slightly different variation of the rules and things. So
Yeah.
stuff that I might like to be trading right now because of certain reasons and certain things I see in the market.
Yep.
And it enables us to give our clients variety. So the newer traders, we say, stick to the inner circle recommendations. Just do those for your first 6 months, right? Get used to the rules, get some experience under your belt. And then if you want to have a look at what we're doing on the desk, just jump over to the desk recos at some point.
Yeah, I mean,
And
to be clear, the recommendations we do aren't arbitrary.
Mm.
It's not as if we don't have other rules.
Yeah.
Like, there's other things that we consider that do make sense when explained, but they do step outside the scope in which you've been taught. And so it's something that you might want to look at just later on, because if you try to learn everything all at once, you'll either never trade, or anyway, you can. There's repercussions to that.
Questions come up what is a good price to buy BSL? So this is Bluescope Steel, a steel manufacturer.
Well, that's a great question, but like, if you look at the chart, what's your initial instinct telling you? Hopefully, we've done a good enough job where we can give you a bit of a we've given you a bit of an indication as to when we think we're going to jump in. And it depends on what your time frame is as well, right? So when is a good price to buy BSL for a trade that's going to last a week or two, or when's a good time to buy BSL over the next 5 years? And very two different answers, right?
Correct. Right. So, just to sort of
make it hard for you. Yeah.
to simplify it,
Yeah.
right? If I'm buying for the 5 years, long term, I would buy now.
Yeah.
Right. I like this stock overall. Just warning on that. If you're buying now, guys, there's some headwinds over the next 6 months coming for the construction industry, and that's interest rates going up, supply chain issues, and potential labor issues as well. So you may have to weather a little bit of further downside if that happens. Okay. So when I buy long term, I obviously don't want to buy at the top, right? But for me personally, buying long term, I don't try and pick the bottom, right? 100%. I've got some good technicals here, good support levels to buy in at.
Yep.
I would buy a portion now. Okay. If it starts uptrending, I'll buy my second portion. Is how I'm handling this.
Yep.
From a trading perspective, I'm not touching it yet. Okay. It hasn't shown up the right technical signals for a short-term trade.
So hopefully you've had enough time to think about when you would probably jump in. And for me, the answer is that you'd want to see a break of 1875, which is that key resistance there. You can see it's played out historically as well as recently. And you'd be looking for perhaps a bit of a better entry signal. I don't like the fact that it's outside the bands today either, right? We haven't gone through that, but that for me says that it should kind of come back inside. So in the short term, I probably see it retreating back to 1840, 1835, somewhere around there for equilibrium. Yep. And it might take a week or two for it to actually push through 1870. Now, I could be wrong, right? It could go up tomorrow. And I shouldn't have to say that, but because, you guys aren't used to hearing us talk, perhaps, that's always on the table, right? No matter what we say, the opposite could certainly be true, right? As Tim mentioned earlier, it's about confidence. And I wouldn't feel comfortable entering this as a short-term trade until roughly we see that 1875 break. But I think it'll actually retreat a little bit before it does.
Yeah, absolutely. And look, this stock's definitely in a different phase than what it was through here, right? So we'll be talking very differently if it was an uptrending stock like this, but at the moment it's not, right? It's consolidating at the bottom of the range. So there's only so much confidence you can have in that.
Yeah,
right?
for sure. Buyer beware, absolutely. But you can draw a little uptrend line there, which you haven't got, but it's starting to show remnants, isn't it?
Oh, it's starting to get a bit of an upward momentum to it for sure, right?
Yeah.
So
it's trying to create higher troughs. It's just not willing to create higher peaks just yet. And we're not going to start feeling confident in an uptrend. We're not going to start until we see a high peak. And for a high peak to come in, you need that 1875-ish to break.
Correct.
But it's trying to, right? Roughly speaking. But it's a great stock fundamentally, right? As we said.
Oh yeah, absolutely. Like it's so cheap down here. Longer term, guys, like once we get through this whole supply chain issue and inflation issue, I think the governments of the world are going to be very keen to stimulate and push, and it's all going to be around construction. We saw a taste of that last year coming out of COVID. Unfortunately, the supply chain couldn't keep up.
No.
And that's where now we got to dampen demand for a period of time. There's going to be, Metricon went under the other week. That was a big builder. That's a bit of a warning sign. That's the headwinds I'm talking about for this stock.
Yeah.
But longer term, once we get past this whole supply chain problem, might take a year or so. This is one of the stocks that I believe is going to really outperform the market.
Yeah.
It's hard to time though. So this is why I'm getting from a buying the stock long-term perspective. I think now is a good time to get some. And then as confidence grows, you buy a bit more.
Yeah. And I was going to say earlier, and you brought it up again, if it does pull back, right, and you weather a bit of pain and it gets back down to $17 or something like that, buy some more, right? And, don't just buy some more, talk to us first or talk to someone, reanalyze the stock at that point in time because something might have shifted. But that's also averaging down is a fair enough strategy, right?
Understand something. When you're talking to people like us and we're doing this every single day, we've got strategies, and all of our strategies might differ a little bit in buying stock long term, right? Someone like yourself might just buy, hold, forget about it, or look at it again in a year. I have strategies to buy stock, okay? And I'll buy a small parcel at times like this where the chart's a bit of uncertain. There's definitely uncertainty on the chart, right? But when there's a nice clear uptrend, I will treat this differently again, right? On the quantity that I buy, the weightings of it in my portfolio, it changes depending on what I'm seeing in confidence, right? So,
yeah, that's a webcast in itself, I think.
Yeah. So don't go buy a whole heap. Don't put half your portfolio on this stock is what I'm saying, guys, based on what you just heard.
Again, we shouldn't have to say that, but
but I probably should. All right, let's get back.
Yeah, let's go back to slides because we are going over time. Maybe, there you go. That's it.
Probably could skip this, I think.
Yeah. So, can I grab this?
Yeah.
So, we trade different instruments just quickly. You can trade stock, you can trade mini warrants, options, forex, crypto. These are all very popular. Mini warrants aren't as popular as they should be for some reason.
Absolutely.
We actually don't know why they're not popular, except for, I don't know, advertising or something. If you trade stock, you should look at mini warrants. And if you want to know about mini warrants, jump on our YouTube page. There's a whole webcast on it.
Heaps of stuff there.
It's really good stuff. Options are pretty cool, but they're pretty advanced. And so you should probably only trade them once you've got a bit of experience.
Yep.
And you can always have a look at Forex and crypto, but we can't really help you with that stuff. It's kind of outside our scope and our advice. Can you click on the page for me, please? All right, so someone asked how you can learn about technical analysis. Well, that's a great question because it allows me to talk about our education. We've mentioned it a few times, and if you've watched any of our webcasts before, we talk about it on a regular basis. Education for us is fundamentally important. It's not something we make money from. It's not a profit center for us. Education is a stepping stone because if you want to be a trader, well, you probably want to understand what you're doing. And so we've developed our education over the past 17 years to be a suitable and practical approach for people who are wanting to learn or improve what they're doing. Right now, you're probably at that first step where, or some of you might be at that first step where you're not really sure what to do. You're reading books, you're thinking, you're studying, which is great. After that, obviously, what you want to do is go and learn properly, go and test, and then the final goal is to actually start achieving your trading goals, right? Our approach is, like I said, practical. It's about teaching you the core skills, okay? We've designed this program to put you in a structured environment where you're learning from a team of professionals as well as educators and traders, right? And there's a strong degree on support, a strong focus on support and mentorship, right? That's really what separates us the most, I think.
Yeah.
We give you so much one-on-one time. We assign your own personal trainer, but I'll go through that a little bit more in a moment. What you'll learn during your education with us is what we said before is the foundations, right? So we're going to focus on picking direction with a strong emphasis on technical analysis. We'll teach you trading strategies for different market conditions. We'll teach you how to manage your risk and your capital effectively. And we'll supply you with a set of trading rules. Now, those trading rules are the exact trading rules that a lot of our recommendations follow, right? They're the trading rules that we teach to all our beginners. And it's something that you can evolve over time. but they're a great place to start because it essentially puts all that information into a structured approach, right? Now, this course is perfect for beginners, but we do have a lot of people with experience coming through, right? Because again, someone could have been trading for 6 to 12 months, not really seeing the results they're looking for. They tried that path of self-education. They made money through COVID, which is a big one because when things are going up, it's not too hard to do that. But then when the market shifts, they realize that success is hard to replicate. I'm being very kind here, by the way. What the education essentially involves is face-to-face contact hours. So we do 2 full weekend face-to-face workshops separated. You can do them in our boardroom. We actually do it in this setting here. We can fit about 8 to 9 people around the table. And we also have live stream available. So if the face-to-face is booked out or you don't want to travel in for whatever reason, you're interstate, whatever it is, you're welcome to do the live stream, right? It's the same as being in the room. You can still talk and all that type of stuff.
It's very, very similar to what we're doing here, right? You'll see Carlo talking. Okay, you'll have the camera on him. You'll see his screen, and then you can interact through the chat box. You can actually turn your mic on and ask questions and things like that.
And you've got a camera, so we can see you. It's not as if you have to type in your questions. You can just talk freely.
So we've created in a way where it's close to you being in the room as possible, but sitting in the comfort of your home type thing. So.
Absolutely, it's honestly fantastic. I think anyway. So following the weekend workshops, you get 4 months of ongoing online training. So because obviously you're not going to remember everything over that weekend. We run paper trading competitions to make sure that you can practice and that you can, figure out where your risk tolerance is and start to develop yourself as a trader before you start stepping into the market with real money.
And honestly, guys, this is our biggest point of difference to anyone else educating out there, right? Is the support's just so fantastic. And it's very hard to digest all of this complicated information on 1 weekend or 2 weekends, right? So what you get is Caro and Ben, which becomes your personal trainers, and they're going to spend a lot of time with you after the course to make sure that you have, in fact, got that knowledge properly, right? So they're gonna look at your trend lines. You're gonna send them screenshots of how you're drawing those lines. They're gonna critique you and say, no, you should have drawn it this way, or you've missed this, you've forgotten this rule. You should have picked this strategy over this strategy for these reasons. So it's not just here's a bunch of information, see you later, have fun. I hope you make some money.
Yeah, or now that you know that, buy into this course, and now you know that, buy this course, and now you know that, buy this course. Education for us, as we said, is a stepping stone. We don't make money for it. It's actually within our interest to make sure that you know how to do this properly.
Correct.
Because we want you to continue to use our services and trade through us and develop a long-term relationship with us. So just to give you a quick bit of timeline, right? We've got some pre-learning for you to do. It's not essential. It's probably about 10 hours of learning if you can afford it, but we're not expecting you to. The course begins in earnest with the weekend face-to-face workshop. That's where we'll cover picking direction, basic strategies, risk management, and the trading rules. You go away for a couple of months and you have online videos that cover the topics that you learned during the 2 days. Those are nice and fresh. I recently recorded those. You've got live webinars that we run every Friday from 12 to 1. Ben runs that. We go through the market, we look for trades, and we cover what you learned during the 2 days. You've got the paper trading competition, and you've got your own personal trainer. Once you've practiced the basics for 2 months, you come back and you do another 2 days in the boardroom, live, face-to-face, or via stream, and we go through all the advanced strategies and refine what you're doing. Following that 2 weekend, there's another 2 months of online training, another competition, right? So, if you lost the first time round, you can have a crack the second time round and try to usurp the winner last time. Because you're trading, you basically, the competitions between you and all your classmates creates a bit of a rivalry. And it's always interesting to see how the second round goes. And again, you've obviously got videos that cover what you learned during the advanced workshop. So we basically put you in a learning environment, a really strong structured learning environment that lasts for at least 4 months. That includes online learning, paper trading, live webcasts, face-to-face sessions, mentorship, trade recommendations. or basically what we think, everything that you need to in order to become successful. It's probably worth mentioning who your teacher is. So we mentioned earlier, it's Carlo Castellano. He's been teaching and trading for over 25 years. He's taught locally, he's taught overseas. He's a highly successful professional trader. He used to run the trading desk, but he's basically just runs the education and puts out trade recommendations now.
So he used to be my mentor. So I learned from him through one of his courses, one of these exact courses, right? And just kind of went from there, right? And I worked beside him for 5 years before he went to semi-retirement.
Yeah,
6 years maybe.
I mean, he's still very much involved. Like we said, you're actually learning his trading rules. So it's the trading rules that he trades from home with. It's the trading rules that he uses to this day. And
not to mention they've been refined over the years as well.
Oh,
right?
Of course.
So he's put his tweaks on them over the years and that sort of thing.
These aren't 25-year-old trading rules. No, these are their update, right? And they're the rules that his trade recommendations follow as well. So when we put out a recommendation, or when Carlo puts out a recommendation, it follows the rules that you've been taught to do for yourself. So it's a great way to kind of dip your toe in whilst you're learning if you wanted to put a real trade on. But it's also, a good way to learn, right? Because it's a practical example of what you've learned, right? I think I'm going to skip through all this because I feel like we've explained this fairly enough. Tim did a pretty good job of explaining the mentorship. I don't think there's anything else I wanted to cover there, but basically we're here to run point, answer all your questions, make sure you're drawing your lines correctly, give you advice on strategy. But that's kind of what we do for people on a daily basis, even when you're trading.
Guys. Like we differ from a lot of other companies out there in this space that, our advice that we give on the desk, although general advice, we don't do personal, it's all sort of general market advice, but every single one of our advisors and educators on the desk have been doing this for years. All right. So not only have we been trading for years ourselves, we've been helping educate people for years. So any question you come up with, almost guaranteed we've answered it from someone else, right?
Oh, there's you're not original.
Efficient.
No. Yeah.
That's very efficient, guys. We're here to help, right? So when you call up to place a trade, we're going to talk about the trade. We're going to talk about the rules. We're going to ask you whether you're wanting to follow the rules or not. What strategy have you chosen and why? We'll have a 10, 15-minute conversation about the trade, okay, and help you out. Whereas if you call any other trading desk around, they're just going to, what trade you want to do? I'll put it on the market. It's done. See you later.
Yeah, and if it's a big institution like CommSec, you're not going to speak to the same person on a regular basis. Whereas you actually develop a relationship with us, and you trend towards an advisor that suits your trading style a bit more. So we'll actually talk about our services quickly at the end, but again, we've done a pretty good job there. If you're interested in doing this workshop, this 4-month program, it's an investment of 3,490, so just under 3,500. Which is an absolute bargain for a 4-month program with 2 weekend workshops. It's got 4 months of online training where you have access to training videos. You've got trade recommendations. You get access to all the technology, including calculators, the trading platform. You get manuals. If you come into the office, it's fully catered for, and you get the physical manuals. If you do it via live stream, we'll send it to you. You get daily webcasts, market updates 3 times a day. You get just a stupid amount of resources. But all of them are there to help you learn and also help you trade in the live market when you're ready, because that's the ultimate goal, right? If you're interested, we've got a course coming up on the 9th and 10th of July. It's already got 7 or 8 people booked in, and we're only going to take probably 10 or 11. So keep that in mind. And you need to make sure that you're also available for the 10th and 11th of September. Now, if you weren't available for the 10th and 11th, we could push you into a one that's a bit later. But we would ideally like you to be available for both the 9th and 10th and the 10th and 11th of September. Okay. So both those weekends.
Yeah. There's a few questions there when you're ready as well.
I'll just, if it's okay, I'm going to leave it on that slide. You guys can read that yourself. But if you're not interested in education because you're already, flying solo and you're pretty happy with what you're doing, but you like our approach, you like the advice that we give, you're welcome to just open up a trading account and trade through us. And, we have people do that. They open up an account, they develop. I usually talk to them first and then kind of point them towards the right person. Sometimes they stay with me. Sometimes I'll push them towards Tim. Sometimes I'll push them towards Sam. Again, we all know each other really quite well. And because I'm being the trainer for probably the longest now, I'm able to kind of push people in the right area.
Yep.
And you work with that person and they become your advisor, right? We don't get paid individual commissions either, right? So there's less conflict of interest there. If I point you towards Tim, it's because I think you're going to gel well with him, right? And then you can have a long-term relationship and he can help you with all your trading and all that type of stuff. So that's something to consider as well if you're already experienced. Yeah.
Ready for some questions?
Yeah.
Okay, so what about CFDs? So that might have come up a little bit earlier when we were talking about the different products.
Yeah,
Things like that.
CFDs. Yeah.
So CFDs and mini warrants are very, very similar, okay, in nature. Mini warrants are actually traded through the ASX, where CFDs are more of a, I guess, a company by company thing, right? A custodial structure, okay, where mini warrant sits on your HIN, okay. Look, they're very similar in nature, guys. We prefer mini warrants, and that's why we use mini warrants over CFDs. Okay, I
Yeah,
guess.
we actually can't think of a good reason why to trade CFDs when
No.
you have access to minis.
So-
And you've got the added protection of it being traded through the exchange. I think 4 or 5 years ago, Halifax went under and took a lot of people's money with it.
Yeah.
That's why we don't recommend CFDs. That's why we recommend mini warrants. If we thought CFDs were better, we'd trade them.
Absolutely.
But we just can't find any good logical reason to trade them.
No. Now, especially these days that CFDs rules have changed, so not as leveraged as they used to be, right? So there's really little difference between a mini warrant and a CFD. Now, in our courses, the technical analysis techniques that we teach can be used on anything. Like if you want to go trade CFDs, cryptos, anything, go for it, right? Our technical rules can be applied anywhere, right? They're technical rules. They can be applied on any financial instrument, right?
And people who trade through us will also go and do those instruments. Like we can't give advice on crypto, but there's plenty of clients of ours who trade crypto. And the reason why they can is because that we've equipped them with that kind of knowledge and they've developed it over time, right?
Yep. So throughout the course, we'll start you on mini warrants because they're very simplistic to learn. So the first weekend, you'll actually learn the mini warrants, and this goes into the second question that's on there as well. We'll teach you mini warrants to start off with because they're so easy to learn. You trade bullish or bearish. You can trade them on stock, Australian listed stock. You can trade them on commodities. You can trade them on currency. So there's variety still. And then on the second weekend, we teach you option strategies, right? Which for me are very important, especially when you start going into market phases that we've got at the moment, where the market's whipping sideways and things like that. It gives you a lot more different strategies that you can lean on in different market conditions.
Yeah. So just to be perfectly clear here, right? Our education is really about picking direction and managing risk.
Correct.
Okay. Now, what instrument you trade is up to you. Some people come out of that course just wanting to trade stock, and that's totally legitimately fine. But that doesn't mean we're not going to teach you a few other things that you can also do, because people do want to trade sideways markets, and you can't do that with stock.
Yeah.
People do want to trade bearish markets, and you can't do that with stock. And so we do teach you a couple of other strategies. But just to be perfectly clear, if you're coming and doing education with us, it's because you want to learn how to pick direction. You want to learn how to manage your risk. And you want to have a great team behind you that's a small local business that gives you plenty of support and mentorship. That's the reason why you come along and do our course. How you apply it, in what instrument you trade, you can figure out at the end, really. Yeah.
The next question: Will I get to meet Sam Green from YouTube?
Sure.
Unfortunately, Sam is not on this webcast now, but you definitely get a chance to meet him through the courses.
He's less glamorous in real life, anyway. I sit next to him, but. Yeah, look, we are at 353 Flinders Lane in Melbourne. If you're local, by all means, come in and say hello to Sam Green and have a coffee with him. All right, you're absolutely welcome to. I'll probably be sitting there as well. But yeah, if you ever want to come in and say hello and have a look-see, you're welcome to.
And we often have people coming in before they sign up to a course just to meet us and see, are we a real company, So
yeah, well, that's true.
Feel free, come in here, just make a time, come in, say hello, have a coffee.
And if you're interstate, you're welcome to fly down to do the course as well. In fact, that's how we always used to do it, but COVID forced our hand to do live streams. So don't feel that if you're interstate, you have to do it via live stream, and don't feel that if you're local, you have to do it face-to-face. It's up to you.
Yeah.
Whatever's easier for you guys. Um,
All right. Well, we better wrap this up and get back on
yeah,
the desk,
it's
mate.
actually, yeah, perfect.
Thanks for listening in, everyone. I hope you got something from the webcast. Don't feel free to reach out and have a conversation with one of us if you want to do the course, or if you want to see what our other course options are. If what we showed you before doesn't quite fit to what you want to do, or you don't know what you want at all, just pick up the phone and give us a call. We've got guys here that will, Jared will have a chat to you and help direct you in the right direction of what you're trying to achieve. Okay.
Yeah.
Because we do offer a lot more than what we've spoken about today.
Yeah.
So if you want to have a conversation, just pick up the phone, have a chat with Jared or Caro.
Yep.
And
Talk
we're
to
going
me if
to
you want.
help direct you towards a course or towards a membership or towards just opening an account or to anywhere, right? Depending on what you're trying to achieve. So,
oh, for sure. And equally, if you've got a question about anything that we've run through that you think of later, you wake up in the middle of the night, you're welcome to give us a call as well. We're very approachable.
just call us the next day, not the middle of the night.
Maybe not the middle of the night. Probably be a bad idea.
Yeah.
All right.
All right.
We're going to finish up there, guys.
Thanks
you so
everyone.
much.
Bye for now.
Ciao.